Hey, welcome to Stocks, Tech, and Beer, where we talk stocks and technology while enjoying an alcoholic beverage, which is mandatory because it makes me sound better. So, if you don't have an alcoholic beverage, press pause, hit the like button, and then go grab yourself a drink, have a few sips, come back, because it's going to sound a lot better. Today, we're going to talk about the rally in precious metals, and I really haven't heard anything about this in the mainstream media. I mean, I don't know, maybe the high flying tech stocks are more interesting than gold and silver. People think it's played out. I don't know. I don't know why it's not there. Maybe the virus news is taking over, but it's been this little stealth rally, and it's taken the world by storm. But if you look at a chart of silver, which I'll show you in a little bit, you'll see that silver looks like the new tech stock. But before we get there, let's talk about beer. Today I've got the new Glarus Brewing Moon Man. I don't know if this comes in focus or not. We'll see. But I picked the Moon Man because if you invest in gold and silver, you're probably going to have your investment go to the moon and make a lot of money. And I got my Packers shirt on. It's the green and gold. If you invest in gold, you're going to be in the green. So I got a lot of subtleties going on here. A lot of subtleties. I thought about this a little bit. But anyways, the beer. It's actually pretty good. I mean, it's technically a no-coast pale ale. I don't know what that means, but it's got a little citrusy zing to it, but it still tastes like beer, not overly fruity. I actually like this quite a bit. And this is a new beer, unlike the Point beer I drank in the Intel episode last that I did. That was disgusting and old. This is fresh and delicious. Remember, New Glarus is known for the Spotted Cow, which before the whole brewing revolution took over was an amazing beer. And I give it a 10 out of 10 on nostalgia factor, 6 out of 10 on the new age beer scale. This, it sounds like sacrilege being born and bred here in Wisconsin, but I think I might rate this a little higher. So this might get a 6.8 out of 10, higher than I rated the Spotted Cow, which I almost feel bad about this. So what's happening in the gold and silver markets? Massive breakouts. So over the past month or two, gold's really been trading in a range right around 1800, a little above, a little below, just kind of up and down. But then this past week, it broke out hard and went all the way. It was over, the futures over 1900 for a little bit. That's within 1% of the all-time high that gold made back in 2011. I mean, as you can see by the chart I'm showing you, gold's been nowhere near 1900 since 9 years ago. In 2011, when everyone thought Obama was just going to implement all these socialist policies and print money, give it out. But that's, luckily the Great Recession ended and we didn't have to do those things. So then gold went back down to where it was when the printing ultimately stopped. And now you can see the silver chart, and nowhere near its 2011 high in the 40s. But broke out of its range. It's at 23 right now, and that's a lot higher than it's been in the past. And it's really just blue sky from here up into almost $45-50, and that could be the next target for silver. So why now? After we've had since 2008, really we've had all these easy money policies, low interest rate, the central bank expanding its balance sheet. And everybody thought that would be the inflationary time. I mean, wasn't this easy money supposed to cause inflation and cause the price of gold to skyrocket? Well, actually, no, it shouldn't. And that's because monetary policy, which is all that the Federal Reserve can do, doesn't cause inflation in the real economy. I mean, yeah, the money gets printed and it gets caught in the financial system. So you'll have the prices of stocks go up, you'll have the price of bonds go up, and interest rates stay low. And it gets into real estate prices, and that's why houses are at all-time highs right now. But very little bit of this money trickles out into the real economy. And that's because, you think about it, most people who invest are rich and well-off. And, I mean, these guys can only eat so much food. They can only drive one car. I mean, they may drive a nicer car than you and me, but they only drive in one car. So a lot of this inflation doesn't make its way out into the real economy. In addition to monetary policy not causing any inflation or much inflation, we also had a few very deflationary forces over the past decade, and that technological advances, robotics, automation, have helped push prices of things down, and as well as low-cost labor in places like Asia and Africa It's definitely helped prices stay low, keep low, despite these mildly inflationary forces coming through monetary policy. But now we have a massive fiscal policy coming through from the government. And fiscal policy, which Congress enacts, gets money out into the real economy. And that's really what's going to get it moving, get the inflationary forces going full tilt. They sent out this $1,200 checks to almost everybody. $600 federal unemployment is helping money get out there. The billions, trillions of dollars in the PPP loans to small businesses have directly gone out into the economy as they pay their employees or tried to upgrade, pay the expenses to stay afloat. And all that money's getting out, even though production has gone kind of stagnant a little bit. So more money chasing after fewer goods means more inflation. Now I predict we will see higher inflation because of this than we've seen in the past. I think 5% inflation over the next few years is not unreasonable, and I think other people agree with me, and that's why the prices of gold and silver have gone up. I mean, you're not really missing out on anything by investing in gold. I mean, sure, the knock on gold is it doesn't pay interest, but either does your bank account, so who cares? I mean, you might be getting 0.2% in your savings account. Well, whoop-de-doo. When inflation is coming in at 5%, you're losing tons of money every year. It just doesn't feel like it. It's just slowly eating away your wealth in a way that you don't realize. I mean, inflation is really a hidden tax on the poor. We shouldn't have governments having an inflationary policy because the Federal Reserve has stated it shoots for 2% inflation every year. That means if you're just holding on to cash, bills, no interest, 2%, you're losing 2% of your wealth every year. It's criminal. But anyways, that's political. It doesn't really impact anything that we're talking about. Tangent. Back to gold and silver. And these inflationary forces are why I think gold and silver are about to move. And when gold moves, silver just rips. And that's because gold can be, it's mined directly. You have a bunch of drill holes. I mean, mine's ready to go. Just flip the switch. It takes a little bit longer than that. Switch and you get gold production going on. But silver is more of a byproduct. There are very few strictly silver mines. Silver is usually a byproduct of mining gold or mining some copper. So you're not going to turn on a copper mine just because silver's going up, because it's a byproduct. And it's not where your real money maker is in that situation. So silver is more supply constrained. When it's supply constrained, you got all this money going in and you don't have anything else coming out on the production side. This money comes in, squeeze, prices go up. And that's why silver really zooms. So I wouldn't be surprised seeing silver, still more than over the next year, more than double from here, whereas gold might just be, 20, 30, 40%. But either way, that's going to be big gains for us. And you should always have part of your asset allocation outside of the dollar fiat system anyways. But, before I forget, not a financial advisor. I'm just a guy sitting here up in Wisconsin drinking his new Glarus beer. Talking to you by himself, in the afternoon. So, cheers to that. If you think I'm sophisticated, bring some of these viewpoints over to your financial advisor and see what he has to say. Although I will be honest, most financial advisors hate gold, mostly because they can't earn fees off of it. They'll tell you, you don't need it, it's a barbaric relic, whatever, blah, blah, blah. But that's because, other than putting you in an ETF, there's nothing else they can really do. So how do you make money in the gold and silver trend? I mean, you can buy the physical metals. That's definitely one way to do it. Just make sure you go through a reputable broker, make sure you're getting the real thing, and you're not paying too much of a premium. I would definitely do a little research on that. I'm not an expert in buying physical gold and silver. The ETFs are also a good way to take advantage of this trend. You have GLD and SLV. They track the physical commodity pretty well. But the way I really like to play a rise in gold and silver prices are through the junior miners. Try to get the most bang for your buck. I love the cyclical nature of these. I mean, you can look at the major gold runs like in 2011, back in the 70s. I think right up to 2000, there's a little something that went on as well. I mean, these companies, like the industry as a whole, has potential to 10x if you get in at the bottom. It might not be there right now, but you're still definitely multi-bagger potential right there. And the reason why huge gains in the miners is because they're a leverage play on the price of gold and silver. And the reason why they're going to the moon is that leverage. So if you think about it, let's say it cost $1,500 to get the gold out of the ground, which is actually pretty expensive for a mine. Most are cheaper. But let's say it's $1,500 all in to get the price of gold out of the ground. If gold's going for $1,600 an ounce, that $100 difference is your profit. But now all of a sudden gold is over $1,900 and you're getting $400 an ounce of profit. Your profits just tripled. And that's why it goes up. The price of gold only went from $1,600 to $1,900, which is, I don't know what that is, less than 20%. But then all of a sudden your profits have tripled. So you get a lot of bang for your buck, and that's why they really go up, down, up, down. Now, I mean, these aren't buy and hold forever investments. If you got gold and silver miners, you got to get out at the right time. So what I tend to do is, after I get a good run up, 100-200%, I'll sell half and then play with the house's money. Let it go a little further, and then when I feel like the price of gold's topping out, cut the ripcord, get out, hopefully for a huge profit. That's the way I recommend doing it. That's what I'm doing right now. I own a few juniors personally. One I like is Metalla Royalty Company. It's not really a miner. They're a royalty company, which they help finance a bunch of different mining projects, and then in exchange for that finance, they get a royalty coming out of there that comes their way no matter what. As long as it's produced, they get a certain amount of gold, and it's really a diversified way to get exposure across the industry. Super capital efficient model. I know a guy in the board of directors of Metalla. He's a no-nonsense kind of guy. I think it's going to be a definite winner. It's already gone up quite a bit for me. But it's going to go up further as the price of gold and these royalty streams that they've built start paying off. In the way of miners, what else do I have? I got Gold Mining Corp and K92 Mining. Both those are doing pretty decent right now. I like the prospects going forward. And then on the silver side, I like First Majestic. That's probably the largest silver out there, but I still consider it a junior just because it's such a small company. And the leverage it is to the price of silver is just astronomical. It's got the potential to just take off. But like I said, these are just ones I bought. I don't really know if they're good or not. I'm not a financial advisor. Like I said, do your own homework. One way to get exposure and not really worry about it is through the ETFs. I like the Sprott Junior Gold Mining ETF, and I like the, I think it's Direxion that makes the Silver Junior Miners. That's SILJ. So either of those will be good ones to get into, but like I said, you like this, do your own homework, just don't invest more you can lose. It's speculative. I think it's almost a sure bet the price of gold's going higher because, the dollar is just tanking. If you look at the DXY index, I should have put up a chart earlier, but I'll put up a chart now. The DXY index just broke out to 52-week lows. And when that happens, that means the dollar is getting weaker, and gold is inversely priced to the dollar. So as the dollar goes down, the price of gold goes up. The price of the dollar goes up, the price of gold generally goes down. Those are the forces, but all else being equal, that's how it goes. So now that the dollar is breaking down, gold's going up, and we saw that happen last week. So that's why, that's another reason why I think gold's going higher. The dollar is being impacted by the fiscal policy of the government, like I said, and it looks like there's going to be more too. There's definitely another $1,200 check coming. It's just the devil's in the details, but both Republicans and the Democrats want it. Everybody wants to get reelected. They don't want to be the guys sitting there like, oh, yeah, we're fiscally conservative during a time of crisis like this. Maybe that's the right choice, maybe not. I don't really care about your politics. I care about making money in the market. And when the market's saying both sides want more fiscal spending, it's going to happen. And the price of the dollar is going to go down. And that's going to drive gold and silver much, much higher. And as soon as the mainstream media gets a hold of this and all these other momentum traders jump on this train, it's only going higher. So I say buckle up, going to the moon. Let's have some drinks. Cheers.